Before we get started this morning, I'd like to acknowledge the graduate students that work with me. Joe Stock, who's in the room here today, and Caitlin Abel, who initially helped us do this work, are instrumental in helping the analysis. And there are two other graduate students here, along with Joe. I'd just like to say and publicly acknowledge the graduate students. They don't get enough public acknowledgments for the hard work that they do. And without their work, I couldn't be up here standing giving the talks that we do. We come up with a lot of good ideas. It's actually the graduate students that end up implementing, collecting the data, with our help analyzing a lot of things. And so that's how we get so much work done is with their help. So if you get a chance to see them, plug them and say thank you as well. As Chris mentioned, the production data that we're working with today was obtained from a large data record-keeping herd. They have an agreement with the National Pork Board to share limited information with really specified uses. And the first one really is to quantify the annual production levels and variation associated with several key production indicators, the things that you would normally benchmark your farm on for the various phases of production. For example, the breeding herd, nursery, wean to finish, and also conventional finishing. The other thing you can do with this type of data is things like quantify seasonal effects associated with key productivity indicators. And we won't get into that a great deal today because there's not enough time. And then the Pork Board also can use this data to identify key research opportunities that would help improve the U.S. pork industry efficiency. So they can use this to drive their research in order to get the most bang for their buck in improving the overall U.S. pork industry. I won't go into a lot of detail other than the industry trends that we'll focus on a lot today really are just raw means and standard deviation. When we get into things like seasonality, much more complex statistical models were used. Keep in mind that the data records reported for each month, for each production phase. So for example, the nursery and finishing data included monthly averages that are based on animals exiting the facility that month. And the sow farm data, the monthly averages are based on litters that are weaned that month. Taking a look at the number of companies and farms that are involved really gives you an idea of what's kind of trending in the industry. You can see back here in 2008, we had quite a few conventional farms, conventional farms with conventional herds and that had over 1,300 farms. Today, roughly the same number of companies, an expanded number of farms. And look at the expansion of wean to finish. Again, similar number of companies, but the number of farms has really exploded with wean to finish. And you can see nursery, because wean to finish has exploded so much, the use of nurseries has actually declined just a bit. You can see actually the same number of companies, but the number of farms has declined by about 100. The number of sow farms has increased slightly from, companies from 39 to 45, and the number of farms has increased slightly from 708 to 774. So what that really tells you is the increase in number of companies and farm represented really represents a tremendous increase in the data volume that we look at. And the more volume of data that we have to look at, really the better estimates that we have. And this results in better, improved information and interpretations that we can make from this. I think the other thing it starts to tell us is that the companies, as they go along, are becoming much more data-driven in their decision-making progress. That's why you see the grow-finish number of herds that have records expanding greatly. They're using these records much in the way they use sow farm records for so many years. This greater use of this data when guiding company decision processes like regarding employee decisions, financial decisions, health, nutrition, genetic, or really any combination of those. So why do we do it? As Chris said, we can use this to benchmark ourselves against other businesses, but also as you think about it, we're in competition with other protein species, producing species, for example, poultry and beef. So we can compare how our productivity stacks up against that as well. So you can look at across species, or you can look at within species as well. You can compare herd performance within those companies. Those companies all have competition with them. Nobody wants to be the bottom farm, and everybody strives to be the top farm for whatever key productivity indicators those companies use. But in a broader sense, we can compare within the country then. The operations, different operations, the companies can compare and see how they stack up against one another and try to identify if one's doing better than the other, what's the drivers that are making them better at that. And finally, we can look at other competition, other countries. Most notably, the Danes for many years have touted their production records. And so you might want to look at the overall averages of the country and say, how do we compare to some of the other pork producing countries? And then finally, they're good to set goals for improving a herd for specific traits or several traits. So let's look at some of the overall averages. As I mentioned, the means and standard deviations across all farms. And so we'll just start to look at these. This is conventional finishing. Start out, look at 2008. The average mortality was above 6%, and we're doing a good job reducing that today by just a little over 5%. What you can see here, though, in the trend is that we really had the best mortality in 2010 and 2011, and that's creeped up on us just the last couple of years. Some of you might have some explanations for that, whether some of this could be, particularly in 2013, some early indication of PED or other things, I'm not sure. The interesting thing, too, is you might guess finishing weights continue to climb. The overall average from conventional finishing was 261 pounds in 2008. It's increased over 10 pounds in the 6 years to 272 pounds. And notice the days in the finisher. Only 125 days in 2008, and we've knocked 3 days off of that. What that tells us, we've got increased weight, fewer days. Our average daily gain had to improve, and indeed it has. 169 in 2008. The last few years, we've stayed steady at about a 181 average. And then you can see the feed conversion that can be quite variable. But notice that in 08, we had a 282, and we've continually whittled away at that. I think that's a bit remarkable in and of itself, because the last few years with high feed prices, everybody's been trying to use alternative grains and that kind of thing, and might give up a few points on feed efficiency. And yet, across all the years here, we've continued to make progress with these conventional finishing averages. Now let's look at wean to finish. Same kind of trend with the mortality, just under 8% in 08. Had our lowest years here in 2010 to 2012, and about a 0.5% increase here in 2013. And of course, with wean to finish facilities, this could represent early indications of some of the PED problems we had late last year. The market weights have done the same thing as conventional finishing, 261 pounds in 08 up to 274 in 2013. And the days in the finisher have increased just slightly, and average daily gain, you can see there, has improved just a little bit. And feed conversion in the wean to finish, you can see there, relatively no change in the wean to finish facilities. Nursery averages, again, notice how we've improved the mortality. It was just under 6% in 2008. We've continued to whittle away at that. Actually, nursery average low was in 2012, and not much more than that in 2013. Really similar exit weights in 2008 and 2013, 49 versus 50.9. Days in the nursery, real similar. And as you can see, our gains in the nursery haven't changed a whole lot across those 6 years. And likewise, our feed efficiency hasn't dramatically changed. Dropped just a little bit, but not wildly. This is the one I like to look at. I get the most bang out looking at the sow farm data. The 2008 pigs per mated sow per year was 22.8. 2013, we're getting 23.7. I think this is pretty incredible. When you look at the next line, 2008, we were getting 2.35 litters per mated female, and this has actually gone down a little bit to 2.30, and this is largely an effect of we're trying to get a little bit older pig at weaning. Went from 19.7 to 21.9. And so as we get an older pig at weaning, our litters per sow per year are going to decline just a little bit, and yet our productivity has continued to increase. This is largely an impact of both the increase in total number born alive, 12.5 in 2008, and it's all the way up to 13.6 in 2013. And the number born alive has increased from 11.3 to 12.4. The other notable thing here that you ought to notice is that the stillborn and mummies went from 1.23 and has stayed roughly the same and starting to drop a little bit. What this tells us, and there's an old paradigm out there, as we get these bigger litters, we're going to have more stillbirths, more mummies. And the data clearly here tells us that's not happening. We're continuing to increase litter size, and at least stillborn and mummies are staying equal. So what happens then is our number weaned went from 9.7 in 2008. Today, it's at 10.2. The problem that I see, the big red herring in this data set, is this pre-weaning mortality. 2008, it was 14.2%, and the problem is it's continuing to increase. 2013, it was 17.3. And again, part of this may be a PED issue starting to affect the data late in 2013. But if not, again, like I said last year, I think this represents probably the single biggest area we need to focus on as an industry, is trying to improve those pre-weaning mortality figures. As we get those pigs born alive on the ground, we need to really strive to work on keeping those pigs alive to weaning and then on through market. As you might expect, we increased the weaning age, as I mentioned earlier, by almost a little over 2 days. The weaning weights have correspondingly increased from 12.4 in 2008 to 13.4 in 2013. I'm not going to spend a lot of time on these data summaries. You can look the data summaries up for the sake of time so we can start looking at some of the segmented data. Just to note that some of the big highlights would be the finishing mortalities declined over time, market weight continues to increase, and days in the finishers remained relatively constant over the last 3 to 4 years. And again, we hit on these a bit earlier. And as I mentioned, this pre-weaning mortality has increased, represents this lost opportunity. Last year I said it's easy to improve, but if you're battling PED, that's not going to be the case. So in normal times, maybe it's going to take split shifts because we know more sows farrow at night than they do during the daytime. And we know that attended farrowings, those first few hours of birth, really help keep pigs born alive and keep them to weaning. The next few tables have average and standard deviation by top 10 and by bottom 25 percentages of the farms for each production stage. So what we did is for each productivity value, we sought out the top 10% and the bottom 25%. And what we did this for is really the top 10% represents what's possible, I think, for each of these. The bottom 25 really represents the bottom end of the production for each one of these key productive indicators. And really, those are probably the values we need as an industry to move up to make the overall industry more productive and more efficient here in the U.S. And the top and bottom are defined as desirable or undesirable for each trait rather than higher or necessarily lower. So let's look at the top 10%. For conventional finishing, look at the percent mortality. Remember, this was bumping 6% for the overall average. You can see in 2008, it was just below 2%. And it shows you the same trend here where the lows were in 2010, 11, starting to increase in 2012, and the same values for 2012 and 13, although still really respectable values. You see the same kind of trend. The finishing weights, the heaviest market weights in 2008 were 291. That broke the 300 barrier. The heaviest market weights this year, the top 10% went over 300 pounds. Days in the finisher, real similar. And again, 106, stayed in that 106 to 103 area, and really good gains. The top 10% of gains represented 195 in 08 and climbed all the way to 2.1 in 2013. Feed conversion, 2.34 in 08, and has stayed about the same with 2.34 again in 2013. We look at wean to finish, similar kind of trends again for the mortality again that we saw with the average, but just lower values, 2.8 in 2008. And again, you see that slow decline to 2012 where it was the lowest. Again, it creeped up to 2.19. And I hate to hound on PED, but a lot of these wean to finish barns could have got hit with PED and caused a slight bump even on the very best herds. Finishing weights, the top 10% of finishing weights in wean to finish barns, 282 in 08, and just under 300 pounds in 2013 at 297. Days in the finisher ranged from, we're at 144 in 08, and we're 148 in 2013. And again, really respectable gains in wean to finish for the top 10%, 175 and at 177 in 2013. And feed conversion, like in conventional barns, didn't change a great deal. Very best, 2.23 in 08 and 2.22 would be no difference in between those values in 2013. The nursery, top 10%, 1% mortality, down to 0.84 in 2013. The exit weights, you can see, didn't change a whole lot. Days in the nursery, pretty similar. And you can see the top 10% of gains and feed conversions, pretty similar in the nursery data. So nursery data didn't change near as much as the finishing data. Now here's the top 10% for the sow data. You see the very best herds averaged 27.5 pigs per mated sow per year in 08, and just under 30 in 2013 at 29.5. A little more variation here, 3.9% standard deviation versus 1.4. Litters per sow per year, a lot of these are artificially high, I believe. Some of these could represent startup herds. They could represent gilt herds. They could represent segregated production systems as well, and why you see those high values. What you can't skew is the total born, 14.1 in 2008, and it's up to 15.3 in 2013. And look at what the very best herds do with stillborns and mummies. Less than a pig in 08, and right at that half a pig in 2013. I don't know if you can get a whole lot better than that. That may represent some biological threshold minimum value. You're going to have a real tough time getting much lower than that. So the born alive at 12.6 in 08 and 14.0 in 2013. The number weaned 10.9 in 08, and today in 2013 is 11.7. The thing I'd like to focus on here, the very best herds have 5% or just above that pre-weaning mortality. Again, maybe shows you what's possible. And so for those herds, maybe we want to seek out what some of those herds are doing, and maybe there are things that we can identify that are different than what they overall industry is doing might be one approach to take. The weaning weights, 14.9 versus 16.7 in 2013. And you can see the oldest weaning ages in 2008 were 22.9, and today it's just under 28 days. Represents the extreme there. So really demonstrates, as I said, what the potential is, and recognize that top performance can help reduce the variation as well. So what I'm suggesting there is, as we segment the data, you can get reduced variation just by segmenting the data into a smaller group. So in the top 10%, those really represent above average performance for each one of those KPI. What it doesn't do is tell you the relationship with other KPIs and the ability to maintain all at top 10%. So in other words, what I could have done is take and rank everybody by pigs per sow per year, what were the top 10%, then took those average values for the rest of the traits to see what those get the very best production had for the rest of the traits. I didn't do that just so you could see what was attainable for these other traits. What were the extreme values? I'll let you look at this summary because I want to get to the bottom 25. Not to harp on this, but kind of show you the other side of our industry that really represents where some improvement can be made. So what I did, let's back up here. When I compared the top 10 versus bottom 25% in both conventional and wean to finish, a huge difference in top mortality versus top 10% versus bottom 25 in finishing, less than 2% as you just saw in top 10. We won't look at the tables for bottom 25, but they're above 10% across the 6 years. The bottom 25% actually are improving. They're moving in the right direction. They're below 9% in the 3 most recent years, but they started out at such a higher mortality rate, they have a lot more progress to attain. The bottom 25 sell at a much lighter market weight than the top 10%. Bottom 25% sell at 254 versus top 10%, 298. That's a net 46 pounds difference. If you look at 84 cents live, that represents just under $40 for every pig marketed in additional gross income. Bottom 25% have more days in the finisher than the top 10%. Bottom 25 had 140 versus top 10, 103. This indicates the bottom 25% is growing slower at 156 versus 2.0 pounds. Again, you get much more rapid turnover in your facilities. The throughput in your facilities is much greater for those herds. And when you look at throughput, maximizing throughput in those facilities, those top 10 herds are going to look much better. The top 10% has much better feed conversion as well, at 2.37 versus the bottom at 3.08. And this is really where a lot of money could be made if we could get them to whittle the feed efficiency down a little bit. The better way to look at this probably is at total cost of production. But with this data set, the company that we're working with doesn't give us the production data, so we can't look at that, can't summarize that. So that's why we didn't do that. Wean to finish, the early years may be biased due to a smaller sample. Are we really getting what the production was? You see a lot more noise those early years. Huge difference in top 10 mortality versus 25% in wean to finish, 2.5 versus greater than 12% across the 6 years. Just like conventional finishing, the top 10% had 288 pounds versus bottom 25, 251. The bottom 25 averaged three weeks more days in the finisher. The top 10%, 147.1 versus bottom 25 at 177.5 days. Consequently, the average daily gain between the groups differed, 162 versus 2.1. Like the conventional finishing, top 10 feed conversion was 2.34, while the bottom 25% was 2.98. Nursery, again, top 10% mortality, less than 1%. Bottom 25% is almost 8% mortality. Top 10% nursery exit weight at 66 pounds. The bottom 25% right at 40 pounds. So you can see it's a 26-pound difference in nursery exit weight. Days in the nursery, top 10, 34.8 versus 51.7 in the top 25, bottom 25. Average daily gains in the nursery, top 10%, 107. Bottom, just over, right at 2/3 of a pound daily gain. Feed conversion, top 10, 118 versus bottom 25 at 169. So continued trend that you see finishing with the nursery pigs. Now what I tried to do with the sow farm is match up the data by data point so you can see the data for yourself. The top 10% for pigs mated per year, 29.5. Bottom 25% at 18.7. That's a 10.8 pig difference. I'm not going to pay a lot of attention to this litters per mated per sow per year, other than the fact that the very bottom 25% is 2.0. This is artificially high, but this is probably a real value and needs to be higher than it is. Total born, 15.3. Bottom, 12.1. Difference of over 3 pigs. Stillborn and mummies, half a pig here, 1.67. Difference of over a pig in stillborn and mummies. Born alive, 14.0 versus 11.2, and that should be 2.8. My fingers were too fast when I typed up this table. So that's 2.8 pig difference. Number weaned, 11.7 versus 8.8. That's almost a 3 pig difference. Look at the mortality. That one's astonishing to me. Now, some of that could be PED driving this up some, but again, the bottom 25% pre-weaning mortality is huge, and the difference over 20%. Weaning weights, highest is 16.7, lowest there 25% at 11.5, a difference of 5 pounds. And weaning age, you can see there the greatest versus the lowest at 9.2 days. So it's important to look at the variation, the standard deviations of those traits as you look at it. So I'd encourage you, as you look at this data, to grab the summary and really study these values. It has the standard deviations by the traits that you can look at. The other thing that it does that I've not shown you is it gives you the slope of change over time here. I think that's really important as well. How fast are we improving these? And we've segmented this by average, top 10% and bottom 25, so you can see how the average producers, how fast are they improving, how fast are the bottom 25% improving, and how fast are the top 10 improving. So I encourage you to get this and really study it, because we're going to run out of time today to go into those a great deal. The other thing that you can find, if you go to www.pork.org/research, is the final report. And we've done some seasonality studies and to look at what months have the peak mortality, for example, or which months had the greatest market weights and so forth. So you can look at which months have the most problems to really focus on those months to try to combat some of those issues like pre-weaning mortality, if you wish.